What's up, guys? Welcome back to Royal Blu FX. In today's video, we're going to talk about how to bet on the direction. Now, I know it's a very vague and generic topic here, but I'm going to get down to the nitty-gritty, and we're going to go down through this whole understanding of why we should bet on the direction first before anything else, okay? But before we do that, please go ahead and subscribe if you haven't already, and go ahead and like the video, because we obviously always leave quality content, and I wouldn't survive without you guys out there, so thank you so much for doing that. So if you did subscribe and did like the video. All right, so what I want to talk about is betting on the direction. Now, I have two ways at Royal Blu FX. We have two ways that we bet on the direction, okay? And we're going to talk about it a little bit more precisely, obviously, because I do want you guys to understand and get the full fundamental understanding of what betting on the direction means and why we should do it first before anything else, okay? So let's go here on my chart, and I'm going to talk about how there's two types of directions that we see, okay? So first of all, there is obviously your higher highs, higher lows, or lower lows and lower highs, right? You can obviously see that if price is going bullish like this, we all understand that price is bullish, so we're going to be looking for buys, right? That day, you know, or maybe for that week, or what have you, right? Depending on what time frame you're looking at. Obviously, we're going to bet on the direction if price is bearish, right? This is all easy, right? This is just one way of doing it, right? Now, this is very generic, because whenever people are looking at this and saying, oh, okay, yeah, my 4-hour time frame says it's bullish, or my 4-hour time frame says it's bearish, or the daily says bullish or daily says bearish, right? It's all good and gravy until you realize you're trading in the wrong direction, right? So hang on there with me, and let me just kind of break it down and tell you why this can also be wrong, why it can also be ineffective, essentially, because what we're doing here, what we do here at Royal Blu FX, obviously, is we have to see both buyers and sellers at all times, okay? Because what we do is we trade supply and demand. Supply and demand are just interactions between buyers and sellers, right? So if we want to be trading that day, we must know where the two are at all times, right? This is having sort of that sonar, right? Sort of a sonar, sort of speedometer, knowing where everybody is, right? Because, or looking at a bird's eye view, right, and seeing where everyone is, right? So you can react to that next step, right? So, so this is just one way, right? Which isn't like the worst way, but it's sort of like, I like to call it like the beginner's, strategy, right? Where people just look to trade this, okay? But the other one that I really like, the one that I mentioned, is knowing where buyers and sellers are. So that means if prices are bearish, like this, right, and you see prices are bullish, right, we have to understand where the reactions happen. So, like I said primarily in this video already, that we trade interactions, we trade reaction points, right? So right here, for example, I want to show you something right over here, right? So you can see that there's a buy to sell, right? There in this area right here, we see that supply took over, right? If you see for some time price was bearish, right, then you see another supply zone came in, right? This supply here failed to break the low and price reversed, right? So now this indicates to us that supply is weak in this area, right? Which means we're going to take over. We want to take over by buying here, right? So this is one type of way you can indicate how direction is going to be. How the direction is going to be, right, or how it's going to be set in place. So the direction may not happen right there and then the way you want it to happen, right? But sometimes the direction doesn't just show itself, is what I'm talking about, right? It doesn't clearly show you, clearly, like the way we see here, like, oh, it's bullish, so that day we're just going to be bullish, right? We're going to be buying, right? Because what if we were just looking at this bullish trend? What if we're looking at this bullish trend here and saying, okay, it's bullish, right? But all the way on the far left here, just right here, right, we're not paying attention to supply here in this case, right? And prices are, let me just get this here so it can all make sense for you guys right over here. Okay, right there. And let's say, right, this is what happened, right? Okay, not making good sense over here. Okay, right here. Okay, so notice how notice how we have a buy and a sell, right? So we have weak demand, strong supply here, and this day, let's say you're on that chart today and you're just looking at this, right? You're looking at the bullish perspective, say on the 4 hour of the daily, and you're telling yourself, okay, well, this is where I want price to be, right? Which is not entirely wrong, obviously, but if you're planning to buy that time, that day, when price gets there to that demand zone and you're trying to buy and then price fails, well, don't forget what happened on the far left, right? Obviously, we understand that there is a supply zone right here, right? So we understand that price is mitigating the major supply zone right over here, right? And then that day, or whatever, that time, when we're trying to buy, we're actually in a supply zone, which means you are in the premium side of things, right, in here. So that's obviously, that could go against you, right, if you're trading in the wrong direction. So knowing where you are at all times with supply and demand can help you exceed sort of where that direction is going to be playing out that day, or in overall in this, an entire week or month, right? So again, I just want to reference this here, that if you're just looking at the entire bullish perspective here, that if prices are bullish, right, and this is the current day market orders here, okay, or current day market price over here, and you're trying to say, okay, I'm buying here, but price fails, don't be surprised and don't be fooled that there is major supply happening all the way on the far left, right? So and all you've been doing is trading the internal structure, right, which is really just the retracement, and this is your actual supply zone that holds everything for price to go bearish, right? So we obviously want to bet on the direction. So when I say bet on the direction, I'm talking about make sure you mark out your supply and demand zones first to bet on the direction, right? So if I was, again, let me just reference this here. Let's go back all the way over here and just say this is what we saw, right? If I see that there's a main supply there, right, the high and the low here, and that we're in a main supply zone here, that I'm betting that day, right, if prices are here at this moment in time, I'm betting that day that prices either should fall, right, and they should fall, right, because we're at the major supply and we want the supply to be respected. So that means that if prices do fall, right, I'm not going to be looking to buy here. I can look to buy here as far as reactions go. I'm anticipating for this low to fail, right, because this high here is actually in demand, right, because this is the major structure that we're seeing. So this is your major supply, right, major high, major low. In here is your minor high, minor lows pushing bullish, right? And then we're looking for price to switch here as far as substructure goes, right? Substructure meaning sub high, sub low, sub high, sub low, sub high, sub low, right? Now, this is how you can sort of, there's two things. When you're betting on the direction, you need to bet on the direction and apply logic to this, right? You can't just say, okay, just because it's a supply zone here, then I'm just going to enter here and hope for price to go bearish, right? No, we need to apply logic to this. Logic, there's a lot of logic into trading, technical, right? So when we're selling, when you're saying, okay, price is it's reaching the supply zone here, and we anticipate for price to fall, I'm not gonna start thinking, okay, I'm gonna be buying here also when price gets here. So if I start selling here, right, I'm not gonna start buying here also, right? Because there is order flow bullish, but we're anticipating for the order flow to start bearish because we're too high in price, right? So I'm betting on the direction, saying I bet that price is going to reverse here and it's going to go bearish, right? Now we're anticipating, obviously. When I say bet, I'm saying we're anticipating. We're not gamblers here, right? So if this obviously happens, this is our confirmation, right? You obviously get a chalk signal here, right? Which I don't heavily focus on chalks. I just focus on failed supplies and failed demands. That helps a lot more than just a chalk on its own. But that's a whole nother topic for another video. So once you get this right, you get a chalk right, you get a failed demand to supply. Now we understand that demand is weak, supply is strong, right? So now this is how we bet on the direction. Now we say, okay, well, we'll just wait, another day or two or whatever till price gets back to our supply zone here, and then I can comfortably come in and sell this, because now we understand not only is the higher structure, right, being respected here, but we're also getting the internal shift happening in here, which means we're ready to sell price here, right, internally. So because we understand that the internal structure builds the higher time frame, right, we need to be honoring that that sort of perspective. all right, and that logic. The technical sort of mechanical movement, right? We got to respect it, meaning that this is internal, right? The internal is going to the major structure at all times because it's building it, right? Then the internal is going to start switching, and it's going to want to build the lower part, right? Which eventually is sweeping all this liquidity over here that we see, right? Oops. It's going to sweep all that liquidity, right? We want it to do that, right? We're not saying it's going to, but that's what we're anticipating, right? And essentially, when you're selling off here, right, what we are looking for is for every demand to fail, right? Every demand should, in theory, fail because it's all liquidity, right? So once price sells off, right, we're just reacting off to each supply and demand like this, right? And this is how we can tell how direction essentially is king, and how we should bet on the direction first. Now, another thing I want to mention here is, let's just say we're betting on the direction. The direction is bearish, right? Let's just say that we, again, come down here at this area. Oops. And then we have a similar situation like this. Price comes here, goes off, right? Price does this, right? Now we understand that we have a buy to sell, failed. This is the flip zone, right? Then price comes up, right, or whatever. It may come just above the high. Sometimes it does this because it collects some sort of liquidity and may sort of mitigate something up in here that we can't see at a bird's eye view, right? But let's just say this happens, right, or whatever, right? Let's just say you enter, right? Let's just say you enter here or whatever, right, and price falls, right? Let's just say you wanted to enter here, right, at the supply zone right there. I can't even see what I'm doing here. Oops. Go back. There we go, right. Right. I gotta move myself here for a second. Hold on. There we go. Where is my supply? Okay, there it is. Okay. All right, so let's just say, right, we're entering here, right, and we're entering at the 50 EQ. Sometimes, again, like I said, price just comes above to sweep some sort of inducement or some sort of liquidity, right, just like that, right, just like that. Anyway, and then, right, but again, you're thinking to get out, right? You're thinking to get out of the market. This is why it's smart to obviously put your risk at the high here, right? Just to make sure that price doesn't come and take you out all the way out, right? But then again, price goes towards your way, right? Now, a lot of times when you're trading with a direction, prices can obviously take you out, take out your stop loss or whatever, right? And this is means of because price is going after liquidity. That's very simple, right? But if you're going against the direction, we know that prices are going to take you out regardless, right? But again, I just want to stress the fact that if prices are going against you in the direction, but know that price will eventually go in your direction, in your favor, because direction wins, right? So the entries are important, right? But they're not the first thing that we are looking for. What we're looking for is how is the flow, how is the flow of the market, right, or the direction of the market, sort of building, right, and creating. Where is it going, right? And I'm going to show you guys on the live chart what I'm talking about. Okay, let's go down here on the let's go on the far left here. I'm going to delete all this right there. Okay, I had all this because I was doing a lot of replay and showing a lot of my other students, showing a lot of my students what we're doing, right? How to structure everything. So let's just say here, okay, right? So let's just say we're on the 15-minute. All right, we're on the higher time frame, right? I see that there's a buy to sell, buy to sell. We see that we have a weak demand, strong supply coming in. So in this case, that means that I'm interested in selling, not buying, right? So what I do is I try to look at areas where prices have bounced off from. For example, you can see here, there's your demand, right? Price went up, and there's your failed demand to supply. So now we understand that demand is weak here, right, and supply is strong. So what I would also do is go inside from this low to this high and go ahead and map out all the failed demands, right? So like right here, for example, right here we have a demand, another failed demand to supply. Notice how price gets back in here and we sell off, right? You can also see it in here, right there. So we had demand going up, right, came back down again. There's more demand, failed supply, right? So we understand that this is the area here that where we want to have price. Hold on a second. For price to come here and respect it, right? Now we're not going to start selling here, which a lot of people do, obviously. But even though we understand that every supply should fail, every demand should fail here because it has done for some time. This is how I'm betting on the direction, okay? Is by simply following the current impulse going bearish, seeing where the previous demand took place, right over here, right? Right here, this is the current demand, right? But the last demand between this low and this high, the last demand was here, right? Which means this demand here, this failed demand right there, broke the slow, right? And you can see a lot of impulse went bearish, right? This means that a lot of bearish momentum has been put into place here by the banks, right? So let's continue here. What we're looking for here clearly is seeing where a weak supply and weak demand is. So right there, I can already see off the bat that price is showing us weak supply, weak demand. You can also see it here. There's your buy, right? There's your buy to sell, right? So we already see that this demand broke bullish right there, actually. You can see it took out liquidity, right? So, and then we can see from here, there's your demand to supply. So we already see off the bat that this is a weak demand, strong supply, and this is where we would have marked out price. In fact, it would have been right up here, right at this high right there. Okay, so the first entry would have been that, right? Just like that. So we can say this is our entry right there, and you can obviously put your risk wherever, however many pips you'd like from there, right? And do something like that, right? So now the second entry would obviously be here. It would be this buy to sell right here. So this would be another entry. Let's see. Okay, there's your breaker, right there. There we go. So the price took off from there, right? Just something like that. So this would be a breaker. So I'm going to lower my risk from here to here because it's a breaker, and we would do something like that, right? And since we're so close down to the demand zone, you know, this would be the TP, really, the first TP right over here. Let's just mark this as a demand zone. And because there's a lot of people interested in demand zones, right, and supplies. So, but the reason why I'm only targeting this low here is because we see that this high broke this low, and we're already down the discount, right? So prices could alter here. They could just come here, bounce, and then run right back up, right? So that's something you always want to be paying attention to. But I'm just trying to show you how, you know, obviously you'd go on a lower time frame to re-enter here, and you can see how big the risk to rewards are here. So let's do this right there. Okay, so we can also see this right there. We can also see that's another breaker right here. So that's a demand zone, right? We're going to enter from there as well, right here. Hold on a second, gotta mark that out, right? Okay, it's too tight, right? So, all right, so there we go, something like that. Okay, it's not hitting it quite, but this is where I was talking about right there, right? At minimum right here is where we want to target, right? Like that. All right, so this is obviously easier said than done, but notice how I'm betting on the direction and not on just entries or structure alone, right? The direction is what I'm putting into priority here. We understand that direction is bearish because you can see I'm only betting on the weak supply and weak demand. This is weak demand, right? Strong supply. Weak demand, strong supply. So it only makes sense for us to sell here, not to be buying, right? Let's go back here, right? This may just break above because it is okay, see, that's what I thought. Okay, let's start from here again. So now we see that here's how I see it. Again, right here is going to be a nice entry for us to sell from. Okay, you might as well just break even on this one, maybe hit a few TPs on these, right? Now here's how I see it again. Weak demand, strong supply, price comes in for the sell, right? But I'm not selling. I just sold from here internally after I got some confirmation. But here is another entry for us. We can still target this. We can still target the upper part of the percentage, excuse me, the zone here. You can also target the 50, the EQ if you want, or the low. So you can have 1, 2, or 3 destinations here, right? Let's continue from here. Okay, there's your entry, right? All right, so we have, I'm betting on the direction, not on the, you know, entries or structure alone, just on the direction. Okay, here's another demand, right? So we have a sell to buy here, and then here's your buy to sell. We could look to enter from there because this is also right there. If you see this low, this high, right? There's your, this little cross that you see here, right, is your failed demand, which is a flip for us. So that is also another entry right there, right? Okay, there we go, right? So that's coming in right there. Okay, that's another entry. Let me just widen this out a bit. Okay. All right, and then you can also see it from this perspective. There's your buy to sell. Did this demand ever break this high? No, it did not. It stopped here. It never trailed above this high, which means this is your next selling point, right? So you don't have to sell from here if you don't want to. You can wait for this to come in to mitigate, wait for price to stop here, and then wait for the next confirmation. The next confirmation here, let me just do this. Let me do this, like that. We're going to target this low at minimum, right? We can also look to enter from here now. You can also see internally that we do have another failed demand here. Failed demand, that's your flip, right? So you have a low, a high, right? This demand here tried to go up, try to break in the new high, but it flipped. So we know that's a sell right there, right? So that was your sell right there. We're going to go above the 50 there, right? Let's get a little more. Let's see how many entries we're about to put into this, right? Okay, so that's your other one right there. Right, we can start targeting everything down here. And the reason why I'm now switching to target this low here instead is because larger structure is creating, right? Notice this is the internal structure that I took in here, but there's low, high, low. This is the low internal to this high and this low. So that means this is a weak demand, strong supply. So we're looking to take the impulse going bearish here because of this internal weak demand, right? So this internal weak demand is creating more internal structure to go bearish. So that's why I'm more prone to targeting this low here, right? So let's continue from here. And of course you can do more entries, say there where I am right here, right? You can do as many entries obviously, but the more you enter, the more you're obviously exposed to the markets. So just trying to show you guys, there you go. So we just took that. Again, weak supply, strong demand. I'm just betting on the direction, nothing more, right? Let's go, where's that, right there. Right, so we have 1, 2, 3 trades going. Let's continue. Okay, so now I look at simply each demand zone right there, right? And I say to myself, okay, that's a demand zone. And now we need this demand to fail, this demand, right? All these demand zones need to fail, right? Because supply is strong here. Obviously, you can see there's a buy to sell here, so that reacted there nicely. We can also see that this was also, this demand is still actually active, this supply is still active, so we can look to target this right here. Now, let me just show you why it's still active. If you look at this, we have demand, failed demand to supply, failed demand to supply, right? Do you see how structurally it makes sense that this has left here and this demand should have gone up here to mitigate, to do this, but instead price stopped here and it flipped, which means this is still also an open area for price to sell off. So we have two areas we can start selling price from. Let's go right here, right? Look at that, see? Like I said right there, this was an area for us to sell from. So that was another entry right there at the 50, right here. Let's target the low. Let's see if we can hit the bottom here, right? Now we're getting into this demand zone where there's a lot of interest here, obviously. So we want to obviously limit on our entries, right? We can always try and enter as much as we possibly can, even if it's failed demands to supplies. But it can only go so much that when price gets down to a near demand zone, there's obviously interested buyers there. When price gets to a supply zone, there's interested people that are wanting to sell, right? So let's see what happens here. Okay, price is running bullish. Notice how price takes me out, right? So if I'm doing, so this is what I said, like you could comfortably say that at the high of the zone here, you could just say, yeah, that's all I want and I'm done with all these, but let's just claim this a loss, maybe even a break even, and then continue from here, because I noticed there was another one right over here. There we go, boom, price tapped us, right, from here to here. Let's target this low, and like I said, there were interested buyers down at this demand, right? Just because when price gets the demand or supply, interested buyers and sellers. Now, we got to put some logic into this, right? We can't just say, oh, you know, I'm going to continue selling every buy and sell that you see, every failed demand right here, right? Like I did here. Logically, it makes sense to target the outer part of the zone, not all the way down, because price like this can come and take you out, right? But for these ones up here, you can hold because they're essentially been sold from the very high, right? So we don't anticipate for price to go even higher above these highs at all, right? But there we go, right? So there's, okay, price comes back, right? So we have a failed demand to supply. We come in here, right? We can just highlight this whole thing, right? Sell again from here. There we go, right there. You can even refine this to just this alone, right? So we have that. There you go, right? And then you hit TP. Now, I know this looks really messy, but I'm telling you guys, bet on the direction first before you bet onto anything else, right? Notice how many trades I got into this just within the 15-minute time frame, right? We had, let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we had 10 entries, right? 2 of them, maybe 1 loss or 2 break evens, whatever, but the rest of them wins, right? Because we betted on the direction. Let's zoom out and see why the direction is king. Again, notice how there's higher highs, higher lows happening here, right? So we're just playing with the higher highs, higher lows going bearish, right? Now, if you wanted to say, okay, should we? Is it smart to sell here, right? Now this is where the multiple time frames comes into play, right? Going on the higher time frame. Let's go on the 4-hour here, and let's go see, was it smart for us to even sell from that point, right? Well, yes, it is, because right here we have a demand zone right there. Okay, this is the demand zone. Now this is where it can get a little tricky, of course. Okay, it's not switching up from here, but I want to show you guys here how we have a demand and then a weak demand, right? Because this high here reached up to this high, it never broke above this high, did it? It never trailed above this high. So we're trading the internal structure bearish here, right? So this is weak demand, strong supply. So if that's the case, supply is taking over, and this supply here should fail. This one right over here should fail, right? But like I said, every demand and every supply, there's going to be more reactions. When price gets to the 50, you might see price starting to shoot up a bit, you know, oops, go back to that. Yeah, reacting from it, obviously, you know, like it naturally should, right? Just like that, right? So look at that. Price got to the 50, right? You could have gone down on the lower time frame here. So once it got to the 50 right here, right? Notice again, we had weak demand, strong supply. Where did price get to? Right at this area right here. In fact, this whole area right there. Right? And then from this low to this high, where's your last buy? It's right here. So you can refine it down to this, obviously, right? Wait for price to switch up, start selling off from here, right? Holding price above this high or at this area, right? But let's just say we were looking for buys even here. Right, there's your high, there's your low, right? Price flips, your entry is coming off to here. You can see there's your sell to buy right in there, so there's your entry, right? Boom, target here, be done, right? From here, we're gonna look for price to switch off to go bearish, right? And similarly to how everything works here. Look at this, price gets here, right? There's your failed demand to supply, internal structure starts to shift. You start seeing right in here, weak demand. You see that demand going up here? It failed, it stopped here, it never went above this wick. supply took over. So now we know supply is taking over. We start entering here, 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 right, to start targeting the low down to here, right? Then once this breaks, fail demand to supply, we start looking at where the last demand took place. So we do this, there's your demand to supply, right? And you go from the high here, look at that, price comes right where it needs to go to sell off. Then you repeat the whole thing from here again, right? We can see there's your failed demand to supply, right there, right? Price, we're waiting for price to get there. It doesn't really get there, that's fine. We come here now, because we now see a failed demand to supply there. So this should be your next entry there. Price comes, takes you out. This is where I say again, you know, you can bet on the direction, right? And if price takes you out just by a little bit, don't be surprised, because don't be surprised if price going in your way, even if it takes you out, right? This is why I leave a little risk above, right? Just like that. Price still goes towards your way because you still bet on the direction, right? So there you go, guys, right? So anyway, I hope all this makes a lot of sense. I know this video is quite quite long, and if you guys have any questions, please leave it down in the comment section below. Reach out to Royal Blu FX, which is me, obviously, and then I'll be happy to answer anything you guys have. Until then, I will see you in the next.